If you clicked on this video, I am assuming that you are trying to get started investing, and maybe you've watched a few videos that were way over your head. They sounded like foreign language, you couldn't understand a thing the person said, and you just got frustrated and wanted to give up. So I have a ton of people in my life, friends and family, and people who come to me and just say, listen, I need the basics. I need you to explain it to me like I'm in third grade, or I'm never going to be able to start this, right? We weren't taught this in school, or at least I wasn't, and I really feel strongly that it should be something that is taught in every school. You should have a class on this is how you invest, this is what it looks like to set yourself up for financial success and a solid retirement, right? Especially in today's economy where maybe you're not making that much money and maybe you're always living paycheck to paycheck and you want to break that. Whatever reason for wanting to invest, I applaud you because it does take a lot of effort to learn. But my goal with this channel is to just break it down, simplify it, and make sure that everyone who didn't get taught this in high school or college can understand what it looks like to become an investor and feel confident to do it yourself and not need somebody to do things for you. If you like being independent like I do, you really appreciate being able to do things yourself. So with that being said, what you can expect from me today is I actually created this a while ago. So I have a Newbie Starter pack, which is on the left right here. It is going to be linked in the description box down below. I highly encourage you go through this video and then go click the link, because there is embedded videos through this guide that you can go watch after this that will help break down things even further that we talk about. So there's a lot of free content you can watch, and so if you really do want to learn, it's all created for you. So we're going to start with lingo. We'll break things down super simple. Like I said, I'm going to shoot for a third grade level here. I am also going to use this guide just like I did with my mom. So when my mom wanted to learn, I had to break things down in a very simple way. She was never taught any of this. She's never invested before, and she wanted to understand it. So she inspired me to create this, and I want to share it with you guys. So with that being said, if you want to get something to write with, take notes, we are going to go on ahead and get started and jump in, and we're going to use Apple as an example because either I'm sure you've had at least one iPhone in your life or know someone who does, so I figured that'd be a really good way to show you how easy it is to understand this entire concept of investing once you realize how tied it is to our real world, right? Our everyday life. So first, let's start with what are stocks. They are publicly traded companies. So for example, Apple, AAPL. Apple is who makes your iPhones. We can use another common example, Starbucks, SBUX, and Netflix, NFLX. These right here are stock symbols. So that is what you go type in when you go to look to invest or trade these names using a stock broker on the stock market. I will break those down in just a minute, but just know these are the symbols you'll need to type in order to be able to see the information on these stocks you want to invest in. So an online exchange where people go to buy and sell these stocks, aka trade them or invest in them, that is what the stock market is. So it's kind of like the farmer's market, right? If you want to go buy produce or sell produce that you grow, you need to go to a farmer's market. If you want to go buy or sell stocks or invest or trade them, you need to go to the stock market. And this right here is what we're looking at. This is the stock market. And you need a stock broker in order to trade on the stock market. So that's the next common question I get is, how do I trade them? So like I said, you need a stock broker. So I don't know if you've ever heard of any companies like maybe Robinhood is a super common one. That's a really beginner friendly one. The one you're looking at right now on my screen is Thinkorswim by TD Ameritrade. That is my main broker, and I do have a tutorial. Like I said, we'll go through this entire video and then go click the link in the description box, Newbie Starter Pack, which is this. You can then go and click on these links and it'll bring you to the videos you need to watch if you do want to understand what my broker looks like and how to use it. But it's like an extended bank account. You go put money in it and it allows you to have access to go trade or invest these stocks. So for example, if you were like, I want to go buy 100 shares of Apple and invest my money into Apple. Well, in order to do that, you need to put money into a stock broker so you can have access to the stock market. And so you would just pick whatever broker you like and then go from there. So next, just like the farmer's market, they're not open 24/7. You can't just walk in and out at any time of the day, right? So they have set hours of business operations. The stock market's the same way. So terminology wise, PM and AH means pre-market and after hours trading. So pre-market and after hours trading can be done outside normal market hours. And so the stock market hours are going to depend on what time zone you live in. So right now I am in Eastern time, so the stock market opens at 9:30 a.m. and it closes at 4 p.m. It's actually 4:07 p.m. So you can see this is data from today. This is pre-market in gray. 9:30 a.m. we opened, we saw a lot of volatility. Volatility just means the stock's moving up and down, right? We've got movement. And now the market closed. You can see this little gray right here signifies that we are now after hours. So after hours is here, pre-market is here, and this is today, just today's movement. And this is on Apple, the one that we just went over. So Apple, who makes your iPhones, this is their stock, and we are looking at how it moved today and what price it's currently at. We'll get into shares in just a minute. But look at your time zones, figure out, where you're at and when the stock market opens, and then you can see the different times right here. More common terminology. We're going to go over bullish versus bearish. So if you've ever heard, I don't know if you watch Bloomberg or anything like that, if they say that we're in a bull market, so bull and bullish means that you think things are going to go up in value or they are going up in value, right? So we can consider, let's zoom out and look at 1 year worth of data on Apple. We can consider the fact that we have been doing nothing but moving up over time, that this is a bullish move, right? We can look at this and see that we were going down over time. That is a bearish move. So if you are bullish on a stock, you think it's going to go up. Long-term investors usually buy because they think a stock is going to increase in value, aka they are bullish. And then people like me who trade and day trade, I can be bearish on a stock. So if I think it's going to go down, I can make money on the way down and short it, or buy options and puts and all that good stuff, which is more complicated topic. But just know if you think it's going to go up, you're bullish. If we're in a bull market, things are going up, everything's green. If we're in a bear market, everything's red, we're going down. And if you are bearish, you are betting that it's going to decrease in value. So how do you make money on the stock market? Very, very common question that I get. The simple version is if you buy a stock at a lower price and you sell it later at a higher price, you profit the difference. So in this example right here, this is just a stock that I was day trading. So I am a very short-term active trader, whereas we'll get into the difference between long-term and short-term trader versus investor in just a minute. But just know that I was looking to buy this day and then sell it the next. So within 24 hours, I was in and out. And so how I made money is I bought at a discount. So the stock was at a $6.49 per share price, and I sold it when it increased in value over $8 per share. So 300 shares, just as a math example, because I know some people really like numbers. At the bottom there you can see 300 shares at a $1.50 increase per share, meaning the stock went from $6.50 to $8, would have made you $450 on that play, which took about 24 hours. And that's an example of how you can make money. But there's also definite ways to lose money. So this applies more, I feel like, if you are not a buy and hold investor, but it can apply to buy and hold investors as well. So let's use the example actually that I was trading, which is XPEV. This is an EV company. So let's say that you were long and you were not buying at a discount, because remember I was buying at like $6, which is way down here. Let's say you were buying over 30 and you had a long-term perspective of buy and hold, and that was your plan. You just were going to buy it at 30 and hope it was going to continue up to like 50, 60 over time. Well, it's done nothing but go down in price, and now it's worth way less than what you invested in. So this is where it becomes very tricky. If you plan to become a long-term investor or a trader, day trader, whatever, and you are picking your own stocks, you have got to make sure that you understand the risks associated with that. That is why most people, so we can use Apple as an example again, most people will, if they're buy and hold, like 5, 10 plus years, they're going to buy stocks that are very well established, like Apple. Apple is a Warren Buffett favorite. I mean, Apple's not going anywhere anytime soon, but they'll gravitate more towards those established stocks or ETFs. So you can also look up SPY, SPY. An ETF is just like a basket of fruit. It gives you diversification without having to add different stocks yourself. That's what most people who are looking to just passively invest from a long-term perspective will look into, maybe dollar cost averaging into SPY, which basically just means, we can pull it up, basically just means, excuse all the lines, that's my technical analysis and charting, which is a later topic, more advanced, but dollar cost averaging means that you were just adding over time. So SPY, the basket of fruit ETF, contains like 500 of the most popular stocks on the stock market. So by buying SPY, you are investing a little piece of your money in each one of those companies versus just picking one company and having all of your eggs in one basket, literally. So with SPY, dollar cost averaging could look like maybe you're adding 50 shares a month, or one share a month, or maybe you're putting $100 into SPY, you know, every single week or every paycheck. Everybody does it different. Dollar cost averaging just means you are spreading out your entries over time to reduce your risk and impact. And that is more of a long-term investing perspective. Okay, so now let's go into stocks versus shares. So let's go pull up Starbucks for this one. And I love using the watermelon example. And just to not confuse anybody, I just want to remind you, this right here, like I said, is my software. And so if you are not feeling like you're able to follow along, what I suggest is after we finish this video, go to this guide and pull up that video. There'll be a link that says my stockbroker, and I have a tutorial on my stockbroker, which is Thinkorswim by TD Ameritrade. And so you can pull it up, create an account if you want, paper trade, all of that good stuff, which we will get into. But just know that you can go in and play around. I just would recommend watching this fully and then going through the guide and watching the extra videos so you can feel like you can follow along. And maybe you want to watch it again. That way you've got, you know, everything set up like I do. Maybe you've got the screen right here and then you're following along. I know some people really like to have everything the exact way that I am doing it. So I just want to highlight, please get through this at least one time and then you can go back through and understand how to use this better. So stocks versus shares. I typed in the stock symbol, SBUX, for Starbucks. So I want you guys to think of Starbucks like a watermelon, but the entire company is like a watermelon, right? So Starbucks is split up into individual slices to be sold on the market. So if Starbucks, the company, is watermelon, like the whole thing, and then we split that watermelon up into watermelon slices and we sell them to people, people who buy them are now part shareholder or part owner of that watermelon. So that's how the stock market works, right? So Starbucks is listed on the stock market, you can see, at $105.28 per share as of today. You see that number right there? So per watermelon slice, you would have to pay $105.28 to just buy one share, which would make you part shareholder or investor in the company. So different stocks can have different shares, and that gets into market cap, which is a little bit more advanced. But we'll just keep it simple. Just understand that the companies are split up into shares. Some have more shares, some have less shares, and you can go on the stock market and buy some of those shares to invest in the company or trade it. Next most common question I get, or actually just statement really, is I am scared of losing money. What do I do? So this is where paper trading comes in, and I just mentioned that. So paper trading allows you to practice with fake money, and most people skip this step, and this is why most people freak out, especially if they're just getting started trading and they lose a bunch of money. Please just understand that you can paper trade. Paper trading has zero risk. You go in with fake monopoly money, you play around, you get a feel for things, and it is magical because it takes all of that fear. You're not risking anything, right? You're using fake money. And so the other thing I want to talk about though is a stop loss. So let's say that you go through paper trading, you're like, I understand that, but is there another way to manage my risk? So let's just say we can actually go back to XPEV for this example because it's a good one. And before we go through this, I do want to highlight two words: discount and premium. What do I mean by that? Think of it like a house, right? If your house, or let's just say that's your neighborhood, right? If houses in your neighborhood last year were going for $200,000 and this year they're going for $300,000, I would consider now that the houses are at a premium, meaning you're no longer getting them at a discounted price. Meaning if you do invest in that house and the market starts to cool off, you will most likely lose some money, at least temporarily, while the market's down, right? So you're not getting a discount, you're buying at a premium. Stocks are the same thing. So if you're looking at data, and we can actually go further out, let's go 3 years out. So at 3-year top, we had a 74.49 per share value on XPEV, and this is 3 years worth of data. Now, let's say that you saw this and you started to buy around $40, hoping that it was going to go back to 70 because you decided to be a long-term investor in this company, and you were just a buy and hold, type person. You had no risk level, no risk management, no stop loss in place, nothing. You were just buy and hold and hope for the best. 5 years, you're going to be in a great position, right? Which you might, but that's, 2 years away at this point, and you're not looking too hot. So what a stop loss can do is literally take you out of your position manually without you even being at the computer. So if you got in at 40 and you had your stop loss, let's say you were willing to risk $5 and you had your stop loss near 35, because as you can see previously it caught support, there were buyers here, we moved up. You put your stop loss at 35, you bought at 40, it did go up to 55 almost, so you were profiting, but you didn't exit. That's a different topic, right? Making sure that you're having an exit plan, but at least your risk was capped because you had a stop at 35, so you were only risking $5 per share. Versus if you did not have a stop loss, you did not react and you were just buying and holding, now you could be down significantly, because we are now down from $40 all the way to $9.50 after a low of $6. So it's very important to, regardless if you're a long-term investor or if you are a trader, especially if you're a trader, that you understand how to set a stop loss and have at least some sort of risk management if you are picking your own stocks and being more active. Now, if you're investing in something like SPY, that's completely up to you and your strategy. If you just want to buy every single dip, regardless of where we're at, that's completely up to you. Would I feel super confident buying at these prices? Not really, but am I a pessimist on the market? Not really. I'm just a day trader. So I can sleep very well at night knowing that all my cash is free and clear and I don't have to worry about what the market's doing. I can just trade it every single day. I love that. That's just me and it fits my personality great. And I also love the fact I can make money on the way up or the way down. So if we're in a bearish market or a bullish market, I have the ability to make money, and that is super important to me, especially with how the economy has been ever since COVID. I just don't ever want to be a sitting duck, and so at least that gives me the ability to do so. Okay, so next let's go back. We're going to stick with Apple. I'm going to try to be a little bit more consistent with the stock that we're looking at. Let's talk about charting and TA. TA stands for technical analysis. So what technical analysis is you are analyzing previous price action on a stock chart to identify patterns for your entry, your exit, and your stop. So we've talked about all of that, but basically technical analysis can include looking at the chart and analyzing it. Where did we catch support? Where did we catch resistance? Support being somewhere where buyers were at and we moved up. Resistance being somewhere where sellers were at and we moved down. And then understanding basic trends. So you can see there's these trend lines here. Let me see if I can find one. Let's see if we zoom in here. So a basic trend line is just following trend right here. So you can see we are in an uptrend. Now if we break here, we would be then going in a downtrend. So understanding how to analyze that chart will be very, very important, regardless if you're a long-term investor or if you are a day trader, in my opinion, because, well, it is heavy in day trading, but I think long-term investors need to understand how to chart and use technical analysis, because it can help you understand where we are. Are we at a premium or are we at a discount? And so understanding those things is really important, unless you just want to be a sitting duck and just hope that the market always goes up and never, secure the gains that you've made, right? You just have to be careful though. There is a difference in taxation. I'm not a tax advisor, but just know if you're buying and selling under 1 year, it's different versus over 1 year. So please understand those rules, look those up before you go buying and selling and expecting different tax savings. But anyways, just know that understanding how to read a chart can be very important regardless of what you choose. So let's talk about the different types of traders. I've mentioned day trader, which is what I am. We play short-term price fluctuations in markets to achieve daily active income. Now, it doesn't mean I make money every single day. It's like a commission job, right? Some days you lose some days you win some. Some days you don't make anything, you don't trade unless there's the setup there. But the whole point is over time, you try to make your winners bigger than your losers. But I just pay attention more to a closer time frame. So for example, I took this short on Apple this morning, which netted me about 12%. I sold a little too early. But yeah, that was a day trade, and that is what I do. So swing traders are people who swing stocks overnight, usually for a few days or weeks, and they have the same goals for active income, but maybe they're just looking at a little bit of a slower perspective. They don't want to be active every day, but they still want to make income off trading and not wait 5 to 10 years. So like for example, a swing trade I've been doing is SONN. It is a penny stock. It's super cheap, but it's like 23 cents. My risk level's under 20, just came from 28. And this is something I've just been swing trading, and I update in the group, obviously, with what my plans are. And with swing trading, I do it a little different. I do dollar cost average, and I have ways of doing that, and it works for me. So I incorporate some of that long-term perspective with dollar cost averaging into my swing trading. Now, investor, but I will say, I typically don't hold for more than a week. More than a week is a little bit too much for me, but sometimes I might be in something for a few weeks, just depending if it's taking longer than expected to hit my price target. So investor is like a Warren Buffett. There's somebody who invests based off long-term growth and fundamentals. So going back to Apple, he's a big fan of Apple, and so if we look at Apple's 10-year chart, go to time frame. Again, if you want to understand how to use this platform, make sure you are going to, after this, look at the guide and then click on this tutorial video. I don't know why that didn't work. Oh, I did 10 days. I meant 10 years. Hold on. So let's do that. So 10 years on Apple goes way back. I mean, 10 years ago, Apple was at $13.89 per share. It has since then gone all the way up to $172.07 per share over 10 years though, right? So that is his perspective. He's a big long-term thinker, and we all wish that we were back in the day where everything was that cheap and we could just buy and hold and it was just glorious. But I feel like things have changed a little bit. Anyways, that is what a long-term investor does, and that is the difference between all of us. How do I find stocks to trade? So I typically have a very short list of stocks that I trade. But if you're interested in finding your own based off of different criteria, I do have a video on that. We won't go too in detail, but just know the scanner that I use is completely free, and there is a video walking you through how to use it. Next, let's talk about the PDT rule. So typically you need $25,000 to day trade. Now, do not let that scare you, because never in my life, well, I mean, obviously I eventually worked up to that, but like I've always started with small accounts, especially early on, of like 1,000 and under, and there is ways around this rule. I actually have an entirely different training completely around how to get around the PDT rule and my favorite way to do so. So I highly encourage you watch that as well. Tons of free content. But typically you need 25 to day trade, 25,000. What does a day trade look like? That means that you are buying and selling the same stock in one day. And then obviously people are freaking out like, what if I don't have $25,000? Like I said, you definitely don't need $25,000, and there are ways around that. Let's first go over an example of what a day trade looks like. What I did today was actually a day trade because I bought and sold in the same day. So if you buy, let's just one share for example, it doesn't matter how many shares, but if you go and buy one share of Apple today and then you sold it in the same day, that is a day trade. You get 3 of those per week. And so that can be a little annoying if you're looking to be more of an active day trader. Like I said, I do have a training around how to get around that, so make sure you watch that at the end. And speaking of training, if you just go to the Newbie Starter Pack, it will literally have everything linked in here in one place, super convenient for you, so you don't have to go anywhere else to find anything. I was able to grow several small accounts. So when I say small account, it's typically about $1,000 or less. You definitely don't need $25,000 to day trade. Regardless if you want to long-term invest or become a day trader, wherever you're at in your journey, my goal with this video was just to make things less complicated for you so you can actually take action. I feel like me, myself, especially in the beginning, I did not do anything about investing or trading for so long because I always thought you needed a ton of money. And I just thought it was way out of my league and over my head. And eventually I did not let that stop me, and I dug in, and I'm so glad I did because it changed my life forever. But I will say that my goal with my channel is just to help beginners and help people who are having a hard time grasp this concept of investing and trading in the stock market just simplify it for you guys. That's really my goal, and I hope I was able to achieve that. Please go watch all of the free content. I try my best to post as much as possible. And then if you want anything more from there, you can, at the end of the free training, it'll tell you more about my 8-week program and my membership. And that's just for people who really want the hand holding and want more from me, right? I can only do so much. But other than that, there's tons of free content on my YouTube that is very beginner friendly, so I highly encourage you go take advantage of that. I hope this was helpful, and if it was, make sure to hit the like button and share it with friends and family, right? If you've got somebody who's interested in investing but they're super confused on it all, I really hope this video can help them. That was my goal, at least. Well, with that being said, I appreciate all of you for watching, and I'll see you next week.